One of the things we have not had really for the last few years is confidence. But the market was headed in one direction, so people felt like, great, we'll ride it out. Now we are seeing volatility. What is this actually doing? Because without confidence, tack in volatility, we got a problem.
Well, the first thing I would say is there was confidence there. Markets don't rise without some confidence. An investor, when they make a positive decision to buy, they have confidence in the markets. I think the surveys were somewhat misleading. So certainly we see a period now of volatility after really the last 3 years the markets have gone in one direction. And I think that's fair enough, and I think primarily it's driven by global concerns more so than U.S. concerns.
But that volatility for your business can spook companies and affect how many IPOs we see come to market. Are you going to see IPOs pulled off the table?
So in our business, volatility is good for our transaction business. We have more trading volume. So clearly July and August was very high, and on a seasonally adjusted basis, extremely high. When you look at the IPO market, it's been a very strong calendar. The last month or two has been slow. I think the jury will decide in the next 30 days. We have a lot of IPOs on the calendar, and we'll see if they get out. Last week was not such a great week. We had 5 IPOs priced. I think they all traded lower. So we've got some warning signs.
Have you had any pulled? Any upcoming
There's
ones?
always some IPOs that pulled, but a lot of them are related to the company issues more so than the market issues. So in any given week, there's typically one that will pull, again, related to the company. So when we see a larger number of companies pull, then that's when we'll have a concern.
This is a development that you have hedged. You've got a trading platform that also trades pre-IPO shares. Is the IPO, is it going to become irrelevant?
No, not at all. It's been a wonderful, really, 3 years for IPOs. We've seen a resurgence of the IPOs, and the quality of the company has been there. The fact you're speaking to, we also recognize, even in good IPO times, as a lot of companies want to stay private for a longer period of time. We think that's a valid option. We think a company should not go public until it reaches a state of maturity. Going public, you're facing an endless series of quarters. So it's our job to provide mechanisms for liquidity for employees. We do that through what's known as Nasdaq private markets for private companies.
So let me put a question at the table. If you're Airbnb and you're trading on the Nasdaq private market, why go public?
Well, that's the issue. They don't want to anymore.
Oh, no, I thought you will know this far better than I, Bob. I thought part of the problem is actually a regulatory problem, because as you have some of this pre-IPO transactions going back and forth, at some point you start to run afoul of the 1933 Act that says you've actually got to do an issuance, because you're sort of creeping into a public.
So what you're saying is correct, but the Jobs Act changed the rules quite dramatically. Before the Jobs Act, if you had 500 shareholders, you had to go public.
Right.
Now it's 2,000, but more importantly, the employees don't count against that 2,000 number.
That's why you have these massive companies hiding under this Jobs Act. These tech companies.
Well, that's companies that want to go public, and I wouldn't say they're hiding. I think the Jobs Act has been wonderful in it allows a company to file confidentially so their competitors don't know exactly what they're doing. It also allows them to really trial run the roadshow. When you look at biotechnology, right, they were in the doldrums for a decade, and they were going through with the assumption investors would not buy their story. Under the Jobs Act, they were able to trial run their story, saw that investors had a large appetite for biotech, and that started the renaissance of the biotech
But has the
activity.
development of the VC market, the venture capital market, also made it, given them more flexibility, because they can get access to capital pretty effectively, without having to go into public markets?
You see more of that where traditional long-only money managers will invest in pre-IPO companies. They invest on not strictly common stock terms, but they have different terms and conditions to it, not typically available to a marketplace. But I would say it this way. When you're in a private market, we think, one, it's necessary, it's good, and NPM is having great success, but it's only open to accredited investors. It has a limited pool of investors. So anytime you have a restriction on who can invest in your stock, you'll have some sort of liquidity discount. And so at some point in the evolution, the public becomes more attractive.
But this takes us back to the confidence problem. Since the crisis, we still don't have full mom-and-pop retail participation back in the equity markets. You've needed to do that for the last few years. Now with this volatility spike that's most likely not going away, are you getting further away from that end goal of getting everyone back in and playing?
Well, I would agree with you that the retail investor participation was not fully activated, but it had improved the last 3 to 4 years.
Are we reversing now?
What probably you will for a short period of time. The retail investors will tend to go with the trend. So if the trend has this volatility with a downward bias, then the retail investor will stay away. If you have a trend with an upward bias, then you see more participation from retail. And that's the way it's been for a long period of time.
But to Steph's point about mom and pop investors, they're also cut out of the growth, because if we have shares trading before there's an IPO in the private market, then we have much better information. You don't get that growth after the IPO when everybody can get into it.
Well, what's interesting, when you have the traditional long funds investing in pre-IPO companies, the mom and pop investor has an indirect way of getting there, right? Because they can buy a fund from T. Rowe that will invest in pre-stage companies.